Businessworld Live. I'm Danny Laurel. It's the start of a new trading day. Let's kick off with our top story. The government has so far borrowed $23.4 billion, or that's about 1.18 trillion pesos from foreign sources to fund its COVID-19 response programs. Finance Chief Sonny Dominguez said the borrowings were made between March 2020 and December 7, 2021. $21 billion, or around 1.06 trillion pesos, were allocated for budget support financing to cover the decline in government revenue collections. The remaining $2.4 billion grant and loan financing was contracted in support of COVID-19 related projects, including the purchase of medical supplies, lab equipment, and vaccines, according to Sec Dominguez. He said the vaccines were procured through multilateral development banks to assure the public that there is no overpricing. In a separate statement, Dominguez said the government will borrow money again from the Bangko Sentral in 2022 to fund pandemic response, but the amount will be lower. Dominguez said the government plans to borrow 300 billion pesos from the central bank next year. That's lower compared to the 540 billion peso outstanding loan that will mature on January 12, 2022. Dominguez said the government will fully repay that 540 billion peso debt in advance. In fact, that would be sometime this week to take advantage of its improving cash position. Now, the Octa Research Group says the downtrend in recent case numbers indicate that COVID-19 might become endemic by next year. This means that just like the common flu, COVID would still be highly contagious, but no longer dangerous to most people and will no longer cause mass hospitalizations. But an infectious disease expert says it's dangerous to use the term endemic this early because this may lead to complacency. Hospital ng Maynila's Dr. Ray Salinel says it's not the right time to make projections of an endemic situation as the country has yet to reach herd immunity. Salinel adds it's dangerous when such statements come from experts who are not doctors of medicine. He stressed the public should instead be encouraged to be more vigilant amid the threat of the Omicron variant. In any case, the Philippine General Hospital says it is prepared for another possible surge. Hospital spokesperson Jonas Del Rosario said they are taking advantage of the current slowdown in new cases to replenish their inventory and prepare their rooms for a possible case surge. Now, the Philippines will be playing a major catch-up today. Of course, we were on holiday break yesterday, but we can see the global markets actually having had one of the best days in several months of a rally on the back, of course, of some new developments, specifically with the Pfizer and BioNTech comments today. For instance, Pfizer CEO said on Bloomberg TV that the preliminary studies with BioNTech, of course, are showing that the third shot neutralizes the infection of the Omicron variant. He also said there are promising results for the other vaccines that they have tweaked for Omicron in the pipeline. But he did, of course, caution and said that there will be more clarity in a couple of weeks. And still, over in Europe, they are still trying to contain Delta. There's a lot of curbs going on over there. And if we take a look at Asia Pacific, that already did see quite an exciting trading day yesterday. But you can take a look at a bit of a pullback, of course, after having had such a trading day. Nikkei 225 down by 0.1%, but over in Singapore, they are up or continuing that rally up by 0.5%. Now, what about us? Doesn't seem to be the case that we're playing a catch up after that global rally, but we have been, of course, enjoying 3 straight days of gains prior to the holiday of yesterday. In fact, we are sliding down by 0.3%. 71.29.79, and this is actually a little bit against what we were expecting or hoping for. Specifically, Regina Caps Luis Limlingan said should there be no cases or a surge, and of course this Evergrande over in China looming risk of default, he says the market may continue to recover because investors might want to start positioning ahead of 2022. You've also got RCBC's Mike Ricafort saying that there's potential window dressing activities. It's, of course, towards the end of the year when portfolios want to buy into several stocks. And then the low cases right now, plus the bicameral approval of the national budget, might be a positive lead for the local stock markets. Recall that the Department of Health reported on Monday that the country is now under minimal risk as the cases continue to drop. I just want to take a peek at the big movers of this morning. You can actually see RLC leading the charge here, up by 2 and 7 tenths of a percent, followed by Mega World. On the downside, you've got a couple of big conglomerates like SM and Aboitiz dropping down. These were, of course, a couple of blue chips that were being picked up during the 3 day rally prior to the holidays. But there is, of course, one specific counter consistently in focus during this period because of that Evergrande scare, but also on the fact that we are reopening the economy. And here to chat with us about that and more, we have with us Joey Roy Bondoc. He is, of course, from Colliers. Joey, good morning and welcome back.
Hi, Danny. Good morning.
Joey, let's take a step back, and just focus on the Evergrande issue here. So many markets globally are, jittery because of that. But that's been the case for quite a while. Tell us, how does this affect the Philippines, directly, but even just in terms of risk aversion for investors looking into the property space?
Well, you know what, Danny? Here in the Philippines, I want to call it, in fact, never grande because I don't see it happening here in the Philippines. I mean, our developers are awash with cash and they are not offering um, these promos that are very risky to so as to entice buyers. I think they are on a strong financial position. They are standing on very strong solid planks, so we do not see that happening here in the Philippines. They're very liquid.
Okay. What about the people that have bought, these properties, of course, and we are seeing a lot, losses in jobs, unemployment still quite high. Have there been defaults when it comes to payments, of pre-developments or even the loan payments? And of course, the banks have set aside some NPLs. Are the people struggling to pay, or are the developers able to recollect anyway all of this money?
Well, here in the Philippines, of course, when you talk about the pre-selling market, we can't deny the fact that there have been backouts in this primary or pre-selling market. But what we have been seeing so far is that developers continue to line up projects. They continue to launch condominium projects across Metro Manila and even outside of the capital region. So we're still optimistic with the pre-selling market. First 3 quarters of 2021, only about 8,000 units were taken up. So that is really low compared to previous years, starting 2013. But, as we always say at Colliers, we're seeing green shoots of recovery. We are bound for rebound, and we believe that by 2022, there will be a stronger pre-selling market. And in fact, we're likely to see that for the by the end of the year, by the fourth quarter of 2021.
That's actually my next question. Now that we are two weeks towards the end of the year, or the trading year at least, and we're looking back at 2021, can you say that the property space has performed as expected, better than expected, worse than expected, and can you justify this and give some explanations?
We talk about the office market, we are still likely to see a marginal increase in vacancy by 2022 before a recovery by 2023. We're likely to see prices and rents in the condominium market recovering also by 2022, and this will be anchored by a projected rebound in the office leasing. So you talk about malls, consumer traffic is rising 60 to 80%. It's going back to these levels compared to pre-pandemic foot traffic. And tourism also is likely to rebound, especially local domestic tourism likely to stoke the leisure market first. So we're still very optimistic with the property segments. Definitely a lot of investors, developers are gearing up for a rebound.
Okay, so 2023, for the commercial office space to be back to pre-pandemic levels, and 2022 for the residential rents. Hopefully by next year we'll not have
Yes.
all of these fire sales anymore. You talked about tourism. how has the recovery been there? It's been open, close, open, close. Like you mentioned, we've been relying on domestic tourism, but there are these fresh bans from overseas. We were hoping that we would get the foreign tourists back in. How long is this recovery going to be taking?
Well, the problem with global tourism, with international tourists, of course, is we cannot attract any at this point because the country is practically, essentially, still closed to a lot of foreign tourists. But what we have been seeing is that the tourism department has really been implementing programs to first stoke the local or tourism or domestic tourism market. So we've already been seeing face-to-face meetings, conferences. In fact, I will have my first face-to-face conference in the next 2 weeks. So it is a very pleasant surprise for the tourism market. We're starting to see MICE activities, meetings, incentives, conferences, exhibitions starting to kick in. I think it will still be a long road to recovery, especially if you want to see pre-pandemic level of tourist arrivals, probably 2023, late 2023 or early 2024.
Okay. Now, speaking of tourism, you've got Mega World here. Still very excited, very ambitious, and
Yes.
building a huge township or residential property, but also commercial and tourist property over in Palawan. Give us an idea about how important this would be for local tourism. And why investors should be investing in this, especially in these volatile times.
Oh, but definitely there will be revenge travel, Danny. Similar with what we see for the retail market, there will be revenge shopping and revenge dining. It's the same concept for the tourism market. There will be revenge travel. A lot of Filipinos already want to travel, whether it's locally or internationally. When we had our previous property market presentation, about 43% of respondents said they want to travel to Palawan, and it topped our list. Second is Boracay at 36%. So, this just gives you an idea that Filipinos really are, have been wanting to travel. And if you look at data from Philippine Statistics Authority, the gross value added on leisure and recreational establishments has already seen positive territory, has already been positive. So that is a good news, meaning Filipinos are now willing to spend, and it's just only a matter of time before they really spend and binge on all these travel expenditures.
Okay, so revenge travel there, just preparing for that. Matagal-tagal pa naman to build this Palawan thing. There's another big project in the past weeks that were, not necessarily announced but being pitched, which is, of course, Manny Villar looking at developing a central business district over in the south. What about that? I mean, Vista Land has not necessarily been, a commercial, apart from retail, of course, but not really office space, but not really business district. How excited are you for this? And again, why now? Why pitch a business district when there's a lot of course, empty businesses, business buildings right now? And how big of a deal is this project?
There will always be a demand for integrated communities or townships, and we believe that moving forward, it is only sensible for developers to continue developing office towers alongside residential buildings. And of course, given the capacity, the ability of the Villar Group, they also have retail establishments. So all these retail, commercial, office, and residential projects complementing each other. So it's no longer surprising to see the Villar Group now trying to land bank, acquire properties, parcels of land that they can eventually develop into integrated communities or townships. So it is a practical route for the Villar Group to really take and to implement.
And what about whether Metro Manila will still be the center. We've seen a lot of new projects outside of the capital. It's become cheaper for people to move their BPOs, etc. What trends do you see in the future? Will the prices of commercial real estate just normalize in the metro, go lower? As of course, places like Cebu or even Davao or Iloilo become more and more expensive.
Well, Metro Manila will remain a very attractive location for a lot of tenants, for a lot of BPO firms, for example. All they know is, Manila is Philippines, Philippines is Manila. So are still looking for prime address, prime location, and for them, Manila is the suitable location. But what we have been seeing is that locators have also been looking at other areas, Iloilo, Davao, Pampanga, you have Bulacan, where we will have a new international airport and where Mega World is also developing an integrated community. So, all these infrastructure and decentralization programs of the government are definitely benefiting developers and are enticing them to build more integrated communities, which should redound to the benefit of a lot of investors, a lot of um, Filipino consumers who want to own their own homes eventually.
Okay, so poised there to take advantage of growth in other areas, but of course, Metro Manila will be remaining Metro Manila
Definitely.
as we start reopening and going back to normal levels of traffic as well. Thank you so much
Yes.
for that. That is,
Thank
of
you,
course,
Dan.
Roy Bondok, Associate Director for Research of Colliers. Here are other headlines we're keeping our eyes on. President Rodrigo Duterte has signed an executive order to regulate the prices of more drugs and medicines used for the treatment of serious illnesses. Acting presidential spokesman Carlo Nograles said Executive Order 155 will cover 34 drug molecules and 71 drug formulas. These include antibiotics, analgesics, anesthetics, and anti asthma medicines, among others. The immunosuppressant drug tocilizumab, which is used to treat patients with severe COVID-19, is also included in this list. Now, violations of the order shall be dealt with in accordance with Republic Act 9502 and other related laws. Now, Fitch Ratings says the narrowing of our fiscal deficit will likely be modest as authorities keep propping up the economy while vaccination rates remain low. Fitch projects fiscal deficit to narrow in nearly all of Asia Pacific economies as the government revenues rises on improving domestic demand. But this narrowing is seen to be more modest here in the Philippines, Vietnam, and Indonesia, where recoveries are still vulnerable to pandemic related disruptions. Fitch Ratings retained its negative outlook for the Philippines, citing its high public debt ratio and uncertain recovery trajectory. And that's a first look into the business day. Today's Thursday, December 9, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.